Good morning, my YouTube friends and family out there. It's your man investing with Cam. Just back on here real quickly. I just want to show you guys how to sell a put credit spread, which is another strategy when selling options. This particular strategy, it reduces your risk as far as loss wise, and as well kind of gives you the opportunity to choose your boundaries, so to speak, as far as your losses and things like that. But this is, to me, just like selling uh, a call credit spread. To me, they are risky because unlike when just selling a put, if your option expires in the money when doing a spread, you lose whatever amount of money that is that the max loss is, in opposed to like I say a put credit or a sale put. Let's say if it expires in the money, at least you're going to end up with all those shares as far as however many contracts that you have. But let me just kind of show you real quickly. I don't do this often because I have lost doing put credit spreads, but I'm going to show you here how to actually do one if it's something that you don't mind taking the risk to in order to receive the reward. So first, when doing a put credit spread, you want to start with selling a put. And so right now the share price of AMC is right at $6.68. So I'm just going to scroll down and I'm going to choose the $5.50 put. So that's $1.44 as far as the premium. And then once you sell your put, you want to then buy a put. And so I like to normally choose, if that option is available, the price right below the sale put that I put in, because when you buy the put, like I said, you want to choose a strike price less than the strike price that you chose when you were selling the put. So I'm going to go right up underneath the $5.50 and choose the $5 option, and so that's $1.16. So as you can see at the bottom, it says put credit spread. So I'm just going to hit that and hit that. And so let's just say if you want to do just one contract, well, better yet, let's go a little higher. Let's do 10 contracts. So with 10 contracts, even though it may or may not, someone may not buy your 10 contracts, because as you can see on the limit price side, the bid price is 28 cents, the asking price is 66 cents. And so Robinhood automatically chose one right in the middle at 47 cents. Typically, the closer you are to the bid price, the higher the probability is of someone buying your contracts. And so to make it let's just do a 30 cents per share. So your credit that you would receive, as you can see here, is $300. And then your max loss down here at the bottom would be $200. Okay. And so that max loss would happen if, in the event AMC dropped below the $5 amount. Then at that point, you would lose that total. You would lose the $300. You would still keep that credit of $300. So truly, your loss is only $100 in the long run. But that's the risk that you take when doing put credit spreads, because like I say, unlike just selling a naked put, if it expires in the money, like I say, you get all those shares. But in this case, you actually lose that $200 or whatever that max loss is. And so I'm just going to kind of show you an example here. So as long as the price, like I said, stays above $5.50, then you're expected to get the full $300 in credit. But as soon as it drops below $5.50, you start to lose some of the credit. But if it hits that $5.20, and I thought it was $5, but $5.20 is when you start to lose money, and then at $5 is when you have that max loss. You can't lose any more than $200, but once it hits $5 or less, that's when you start to have that max loss of $200. So you have to be careful when selling put credit spreads, because like I say, you can lose a lot of money. If I could give you any advice, and this is not financial advice because I'm not a financial advisor, but what I like to do, let me put it in those terms, is just, like I say, sell those naked puts. If it gets exercised, then turn around and sell covered calls and continue doing it that way, because your risk is a lot less in opposed to when you do credit spreads, or even when you do call credit spreads, which I'll show you how to do those later on. But I hope everybody has a great and wonderful day. Again, this is Investing with Cam. Don't hesitate to like and subscribe to my videos, and I hope this helps a lot of people, and I'll have another one coming. Have a great day.